trade pros. In today's video, I'm talking to Trent from Forest Park FX. We're talking about the 3 different brokerage types in currency trading and how you could save some money on commissions. So I'm going to go through and ask Trent a few questions. I'm really excited to have him on the channel. Usually he interviews me, so it seems the tables have turned. Enjoy the interview.
Excited to do something with you on the reverse side of the table this time. So a bit of background on myself. I was a futures proprietary trader in Chicago from 2009 to 2012. I worked for what at the time, which was it was the #1 prop firm rated by the CME Group, and then we broke off. When I say we, my brothers and I broke off and started our own, and we did that for a year or so. Basically until the markets got tough to trade, and I was sitting there and paying all these desk fees. It wasn't really making money. Didn't lose money out of the markets, but after desk fees and whatnot, I was starting to draw down. I'm like, why would anybody do this? I was like, there has to be a better scenario. So that took me to the other side of the business. So I switched sides and went to the brokerage side, which is where I'm at now. Prior to joining Forest Park FX, I worked for 2 ASIC regulated brokers, specific FOREX brokers, FOREX and CFDs. ASIC is the Australian regulator. So 2 ASIC regulated brokers, and then I wanted to do more business in the States as well as international. So I packed up the dogs, packed up the wife, and moved down to Florida to come down and work here now, and been here for about a year and a half.
Awesome. So you've transitioned from the future side of the business and moved more into the Forex side.
Yes, correct. Yep. So initially for the first several years, it's on the future side, and then converted and went to the dark side, and now on the Forex side.
To the dark side. Awesome. All right. Good stuff. Well, since you're in the Forex business, and I know you're deeply involved with it, a lot of our viewers on the YouTube channel have been asking questions on foreign exchange. At Trade Pro Academy, we teach a lot of analysis on technicals, but we don't dig deep into Forex specific trading. So I figured it'd be a great opportunity to bring you in and ask you a few questions for new traders who are getting into Forex, but also existing traders who may have been doing it for a while, and ask you a few questions on the other side of the business, the side kind of the back door, and what happens when they click the button, execute their trade, and more on the operational side. So one of the questions I had for you to start out with is, what are the different broker types that are offered out there? Like, what is the difference between the brokers and the Forex exchange game, and how does a trader distinguish between the 2 or 3, and how do they choose the right one for them?
Okay, there's a lot in there. I'll start with the different brokers. The most common 3 broker types that you hear about in the industry: you have a market making / dealing desk broker. You have an STP, straight through processing broker, and then another one that's popped up here in the last couple of years is an ECN, or electronic communication network broker. All 3 models are very different, and I can go in to explain a little bit about each one of them. So a dealing desk or market making broker is a broker that is taking the other side of your trade. Meaning if you buy, they're the ones selling it to you, and if you sell, they're the ones buying it from you. They are the direct counterparty to every single transaction that you make. Some people don't like this model just because they believe it has a conflict of an interest. Inherently it does. I mean, the broker inherently wants you to lose money, because when you're losing, they're making money.
They're winning, yeah.
So a lot of people have strayed away from those models or tried to find alternatives. But in my opinion, with regulation and how strict it's become, there's no manipulation, there's no games that these places can play if they're in a regulated jurisdiction. So United States, Australia, FCA out of the UK, if they're in one of those jurisdictions, there's no manipulation going on, and it actually can be beneficial to some traders. To give an example, Oanda is ready to fill any order up to 10 million on both sides of the market at any time during the day. So if you see that price, they have 10 million behind it. The price might be a little wider because they're expecting to fill 10 million, but say you're a large trader that's trying to get off $5, $7, $8 million per click. That would be a good solution for you versus one of the other broker types that may only show 200,000 top a book or 2 lots top a book.
All right.
Not sure if you guys would understand lots or the notional value more. But so when I say 10 million, 100 lots notional.
Right. So, well, here's a question. So, for somebody considering or choosing a broker, how do they decide which is a good fit based on their account size or their position size they're planning to take? Is there information that's available out there that you can find that out, or do you just call the broker directly?
Actually, our firm helps a lot with that. There are a lot of variables that go into determining which broker that is best suited for a trader's particular trading strategy. A couple of those variables that go into place are where they're located, what style of trader are they? So are you a scalper? Are you a position trader? What's your average duration of trades? What's your trade size? What's your deposit size? These are all things that go into us recommending a broker. So it's actually something we do on a daily basis. It's at the core of our business is recommending certain brokers. We sort of consult with clients and ask these questions, get a feel for what they are looking for, and then we'll make a broker recommendation or two and tell them why we recommended that one.
Right. So it sounds like you guys are in the business of custom fitting the perfect solution for each client, right? Because we know Forex, there's so many different solutions out there, and sometimes traders jump at the one that markets the best, but it may not be the best solution for them, right?
Exactly. So unlike an exchange traded market, Forex is off exchange, which brings a host of variables. You have different regulations, you have different pricing, commission, platforms. There's order execution types, whether it's a straight through processing, ECN, dealing desk. There's a lot more variables that go into it than on the future side, which it more or less just comes down to which platform do you want, which data feed do you want, and how much are you willing to pay in commissions. Those are really the three in the future side, where there's probably 15 different variables on the Forex side.
Right. That's amazing. So that's really good for listeners to hear. I would definitely recommend kind of customizing the solution. It's not about wanting a car. It's what kind of car, how will you drive it? And then you're just getting matched up to that, right?
Right, exactly.
If I could use a cheesy analogy. So I want to go back to one other thing. If I could ask you about the dealing desk. So we're going to go through the 3 different broker types. For the dealing desk, if the brokerage takes the opposite side of the trade as you, does that mean then, let's say they combine the book on a net basis, does that mean that at times they could be net long or net short, and it's directly opposite to what the retail client is doing?
Oh, 100%. So when a broker is a dealing desk or a market maker, there's 2 different ways that they can handle order flow. They can do it on an individual client basis and be like, I want to face off against this client or this client and not these. And so they'll give somebody else or pass through the risk on those particular clients to somebody else, but take the risk on these other clients. And they basically just run algorithms that say this client's profitable, this client's not, here's how much risk we're willing to take. But to answer your specific question, the other type is, yes, there are brokers out there that do it on a net basis, which I would say is probably the more common one when you're talking about a market maker or dealing desk. They'll bring in all order flow from customers, and then they manage their positions based on how much risk that their firm's willing to take. So, you have 10 traders that all go long the Euro USD by 1 lot or $100,000 notional. Their book is $1 million. Now say they don't want to have $1 million of exposure. They're short now, so they don't want to have $1 million short Euro USD. They'll go out and offset that into the market.
Right, so they'll hedge their net book based on client exposure. That's awesome. Cool.
Correct.
It's good to know. And you said the second type, so that's on the dealing desk, and the second type was the STP, the straight through processing.
Yep.
Can you give us a little bit of insight on how that works?
Yep, exactly. So straight through processing, this has become a pretty popular model outside of the United States. So unfortunately, in the United States, there are no STP brokers. Every broker is a market maker. Internationally, though, there are quite a few STP brokers. And in most regulated jurisdictions, so Cyprus and the FCA out of the UK, actually designate it, and you can go check to see which one your broker is. For the FCA, it's called you're either principal or matched principal, meaning you can either take it or you have to match that trade. And And what that specifically means is when you say you're the retail trader and you place a one lot trade, the broker at the exact same time that they receive that order has to go and open a trade with another counterparty or a liquidity provider. So now they have no risk on their books. So if you start making money, the LP starts losing money, but the broker doesn't care. They're literally just capturing the spread or the commission that they charge on each one of your trades. So the reason why people like this is because it's a conflict-free in theory, because the broker wants you to continue to trade and make money, so you're continuing to pay commissions or spread.
Right. So the STP's revenue source is the spread, whereas the dealing desk has market exposure as well that they can profit from.
Yep, exactly.
Okay. Awesome. So that's an important differentiation between the two. In terms of liquidity, so let's say we stumble across one of those Swiss National Bank announcements that we had a couple of years ago. What broker, how would they react in those scenarios? Which one is better suited to stay liquid and to stay in the game and be afloat without
Actually, in that scenario, the dealing desk or market maker is, because they're taking the risk on their clients. Where an STP, to give you an example, this is exactly what happened to FXCM. They had passed all their trades off to a counterparty, and now the market's shut down and there's no pricing. When it reopened, there's a bunch of debit balances from their clients. Now, FXCM is a large corporation. Their liquidity providers came to them like, pay us, you owe us this much money. And
margin call.
Margin call. Like, it's similar for a trader. They have the same calls, but now they're a large corporation, a big business, and they're like, pay us this money. We want this money now. And to add to it, they're below net cap requirements, so they had to notify their regulatory body here in the States, and they basically came up with the money, and they took out a $300 million loan or something astronomical to save it. So now they took out a $300 million loan, and they needed to then go and contact all these thousands of clients that went debit balance and try to recoup the money from them. So, somebody might have lost $1,000 or $2,000 or $500, and instead of, and they're from all around the world too. So instead of basically going out and getting all that money from those clients, they just elected to go and collect the money from the top 10% of the people with debit balances, which were the large accounts, because it was easy to recoup that money, and then they wrote off the other $275 million that they ended up losing because it'd be too difficult. On the reverse side of that, you have like Gain Capital and Oanda, two very large market-making firms who made a significant profit that day, because when the clients lost all that money, because most retail clients were caught off guard that day, they were directly pocketing that money because they were the ones on the other side of it. They didn't have the same counterparty risk that the FXCMs in the world had.
Interesting. So for some of the people that are listening and are kind of, just to give a little quick context to that, Swiss National Bank, I don't know the exact year or month, but I remember there was a surprise announcement that they were coming to the open market with an operation, and that caused the magnitude of 300-400 pips, or was it more? Close to 1,000.
Like 3,000.
3,000, yeah, that's massive. 3,000 pips is huge. That's 30 cents on a currency, which if you put the leverage, it's mostly 50 to 1, right? Some firms do 20 to 1, 200 to 1 even, and plus. That was a massive event, and I think people don't realize that when they're going through straight through processing or STP, you're matched directly with the client, but your risk is that client being liquid. If that client doesn't have the money and they debit and they blow out their account, then you could be put at risk as well. So is that correct in saying that?
That is correct. It's very similar to the future side, where you have to go through a clearing firm. Right. And if you can't come up with the money, the clearing firm has to pay the exchange that money they basically guarantee that you're going to pay. It's similar. That's similar to how FXCM was operating. Their clients couldn't come up with the money, so they had to pay.
Right.
And it came out of their profit center. The date was January 15th, 2015.
That's it? Did you Google that? Or
no, I know.
Do you remember it?
Trust me, I got a phone call at 4 a.m.
Yeah.
I was on the brokerage side at that time.
Yeah, I was trading it, but I didn't realize it till the day after. And then, like when I woke up, I didn't have any position, so I had no skin in the game. So it's funny how you remember a date when when you have a position, right?
Yeah, I was at an STP firm.
Yeah.
Fortunately enough, we just didn't have a lot of clients trading that position, so our losses were very limited.
You mentioned that we had a third type of brokerage as well. So straight through processing, there was a dealing desk, and the third one was ECN. Can you tell us a little bit more about that?
Yeah, so an ECN broker is an electronic communication network broker. This could mean a host of variable things depending on what level of trader you are. But for the direct retail trader, generally what this means is you're just going to receive the raw pricing that the broker's receiving from their liquidity provider, and then have a per trade commission on that. So for example, you might see a 0.2 pip Euro USD spread and then be charged $7 per one lot round turn trade. I think this phrase personally, I've seen it pop up here in the last couple of years, but it gets thrown around quite a bit. And I think it's important to distinguish that as a retail trader, you're not trading at an ECN broker, because there's a primary distinction. ECNs typically operate like a real exchange, where if you put a bid or offer in, somebody else can come in and take that liquidity. So you are essentially a maker in an ECN market, a real one. At the retail level, you're only a taker. You don't make any markets. You can't put a buy or sell. You're just taking whatever liquidity is available, but nobody else is seeing that liquidity. So I think a lot of these brokers just use it more or less for marketing. But generally speaking, the term for at the retail level means you're getting the raw spreads from the broker, and then you're being charged a per trade commission.
Right. Okay. And is there, if somebody was to go on a true ECN, is there an advantage of it over others, or is it not something that's marketed towards the retail trader but not actually available?
Yeah, exactly. It's definitely not available to retail traders. Typically speaking, you need probably about $100,000 account, and as well as do some sort of minimum volume requirement.
Right.
So yeah, retail traders, it's not available to. The advantages, always, it's tighter pricing. You can more or less negotiate your pricing. Retail traders more or less get thrown into the mix. They're like, here's the pricing the broker's offering. Here's what you're paying, no matter what volume you trade. And at the larger institutional level, you can dictate your price based off how much volume you trade.
All right, awesome. So that's really good feedback, and I think it gives a lot of insight to our traders that are interested in Forex, the different type of brokers, so they could make a choice for themselves. There's one question I know that everybody watching this interview is thinking about right now: is stop hunting a real thing?
At the regulated level, no, absolutely not, because every regulated broker has to do post-trade reporting, and basically the regulator can go in and view all the trades and see if one client got a fill that's different from other clients at the same time in the same market. So no, at the regulated level, absolutely not. And by regulated level, I mean the major jurisdictions: the U.S., the U.K., Australia, Canada. Like these are the major regulatory jurisdictions. But if you're talking about a BVI or Bahamas broker or someplace like that, it's possible. I would probably say it's very likely that it does go on. But yeah, major brokers or major regulatory jurisdictions, it does not happen.
Awesome. Okay, good. Thanks for that background, because I know people are out there wondering on that question. It's a big one. So it just seems like if you
it
choose,
happened in the past. So
it has.
There's a reason why there's rules now in place, and they know what to look for. It most certainly did happen in the past, but nowadays, no.
Yeah, but it sounds like overall, if you, for example, if you contact Forest Park FX, you guys will be able to assist the person in choosing it sounds like getting a high quality broker is the best way to go around that, right? You just get the highest quality, get the opportunity in there, and it won't be an issue. But if you choose some other unheard of brokerage and you get attracted by the lowest commission, then who knows, right? Anything goes. You got to be careful. It's a risk-reward relationship.
Certainly, and it definitely has an impact on your profitability, or can have an impact on the profitability of your trading strategy, depending on which broker you choose.
Awesome. Well, I think this leads really nicely into my next question for you, my last one. In terms of commission, so we know that active traders, commission's a make or break for some of them, especially if they're scalping markets. What is the best way they could get a lower commission, and how do they choose between each one of the three broker types commission-wise? And how can you guys help more particularly at Forest Park?
Yeah, thanks for asking that question. It's a very loaded question. You must have read our description of the company.
Yeah. I have, yeah.
So our company, for those listening, provides cashback rebates. Essentially what that means is Forest Park acts as an introducing broker, meaning we'll introduce your account to a brokerage firm, and then they will pay us a commission for introducing that account on a per trade basis. And of that commission, we actually split it with our clients to help them reduce their cost of trading.
Right.
So say a broker, pays us $5 per lot traded. We, generally speaking, we rebate anywhere from 25 to 60%. So we'll go and we'll give that person back a $1.25 for every trade, which ultimately reduces their cost. Which is obviously it can be very, very lucrative if somebody's doing a scalping type of strategy and trading 100, 200 lots a day.
For sure. So if you're an active trader and you're in a retail brokerage, you went into yourself, you haven't been introduced, then it definitely makes sense to contact you. You save a fair bit amount of money. Could you work with clients who are already have an active account or are trading with a brokerage, or is this just for new accounts?
In most cases, yes. It's difficult to answer it with a blanket statement because every broker that we work with is different. But for most brokers, yes, if you have an active account, we can work with you. There just might be some different procedures that need to happen in order to do so. But it is important to note that we don't hold client funds. We don't impact client trading. If you come to us, your spreads, your commissions, everything else is the exact same as if you'd went to that broker directly as it is by going through us. Literally the only difference is you get our extra added support as well as the rebate at the end of the month.
All right. So it sounds like when you go on LinkedIn and you want to connect with somebody, you see the people that know that person that could introduce you to them warmly, and have a better relationship that way. So it sounds like that's what you guys are doing just for the Forex edition.
Yeah, that's a good analogy. So you as an individual trader can't go and negotiate your rates. In most cases, there obviously are some exceptions if you have an extremely large account, but in most cases you can't go dictate your rates. But because our firm introduces so many clients per month, they are willing to obviously set up a business arrangement with us and compensate us for those introductions, of which we then split with the client.
Nice. So it sounds like a win-win-win for everybody. The broker wins for the introductions. You guys win on some of that, on some of the commissions as well. And ultimately, the retail trader wins big because they get to save and get a commission that they're not otherwise able to get.
Yep, exactly.
Okay. Awesome. So thanks a bunch. So for people that are interested in contacting you and finding out how they could work with you guys to, number one, select the right broker for them, because I'm a big proponent of that. You got to have the right tools. You got to be at the right place in order to be successful in the market. And then also to get the commissions, how do they contact you guys? And what's the process? What could they expect to happen?
Yeah, I mean, they can go to our website, forestparkfx.com, so they can review all the brokers that we work with. If they want to contact me directly, all my information is there as well. It's just my first initial, my first name, and then last name. So THOERR at forestparkfx.com. And if I ever send an email, my cell phone's on there, my direct office line, my Skype, pretty much all my contact details I put, because I do want to make myself available to all of our traders that work with us, because this is a very much a 24-hour a day basis type of industry. So I always make myself available.
For sure. And I can attest to that. I know working with you, Trent, like you've always been accessible, and you guys yourself and the guys at Forest Park do a great job. So thanks a bunch for coming on, sharing this, a lot of insight, a lot of great information with our traders. I'll put all the contact information for Trent below in our YouTube description. And yeah, thanks a bunch. I think we've learned a lot from you.
Thanks for having me. It was a pleasure.
And just for fun, I figured at this point I would ask Trent, hey, you're a betting man, I'm a betting man as well. Who would you take, Mayweather or McGregor? Here's his answer and the wrap up to this interview.
considering or looking at the odds and the bets of Mayweather and McGregor, who are you voting for?
It's funny because you throw in the odds.
Yeah.
on a 1-to-1, Mayweather will win the fight with no knockouts. McGregor will be lucky to land more than 15 punches the entire fight. If you throw the odds in, though, I might risk money to $20-$30 on McGregor just because the odds are more stacked in his favor. But
the trader in me looks at.
I'm going to lose that money.
Yeah, exactly. The trader looks at it and says, you got to go with momentum. You got to go with the trend. But then you look at the odds and how cheap they are, and you know what? Take a flyer.
Right.
Consider it the same. Yeah.
Yeah, exactly. It's like a lottery ticket. If you
Exactly.
know you're buying a lottery ticket, 1,000,000 to 1, you're not winning, or it's more than that. But the chances are you're not winning. But just in case if you did, you might as well spend that dollar. Pays
out big for sure. All right, man. Thanks so much for coming on here. I know you didn't expect that question, but thanks a bunch. Take care, Trent. Thanks for all your information, and glad to have you on the channel.
Thanks for having me.
All right, Trade Pros, that's a wrap. We hope you enjoyed the video. Please like, share, and subscribe, and comment below and tell us, how's your trading going? How did you like this video? And what do you want to see next? Take care and have a phenomenal day.